Hi, and welcome back. We're going to spend a little bit of time talking today about mortgages and whether you should or should not pay it off. We get questions all the time in our office about, I'm retired, I've got to pay my mortgage off. But is there really a rule of thumb, or is there kind of a best practices when it comes to this?
Yeah, I think, Dustin, this is one of those decisions or discussions that comes down to really two important factors.
Yeah.
And I would really make the argument that one of the two is more important. What I'm talking about is there's financial implications, the financial data on analyzing it. But I think more important is the emotional side of analyzing this decision as well. If you want to look at the financial or factual information, interest rates right now are pretty low, right? And performance for most investment vehicles or portfolios has been pretty good, right?
Yeah.
So what you want to do is you want to look at the deductibility of the interest. With the tax law change, the standard deduction went up by quite a bit. So not as many people are going to be itemizing their deductions anymore. So maybe the interest rate deduction on their mortgage isn't as attractive. But if you're able still to deduct the interest because you're itemizing your deductions, you may still have a nice benefit. So if you have, say, a 4% interest rate on your mortgage, but you get to deduct it, maybe the true cost after tax deductions is maybe 3%. You then have to just decide, well, can I on average earn a better return than, say, 3%? And of course the answer there would be yes. Even in a fairly conservative environment, we're able to generate a return much better than that. So from a financial standpoint, it wouldn't make sense in that scenario to pay off the mortgage. Why would you take money out of an investment account to pay down a mortgage where you're earning more on the investment account than what the mortgage is costing you? Why would you do that? Well, the reason why you would do that, and that's the second factor that I mentioned, that is the emotional aspect or the emotional desire of just being completely debt-free. And not owing anybody any money.
I keep going to retirement and owe the bank this.
Right. So if you're laying in bed at night, worried, not able to sleep, then even though we can prove to you on paper or running an analysis or something, even though we could prove to you that you would be better off not to pay the mortgage off, if you just can't live with that decision, then you should pay the mortgage off. Now, one of the things that we'll recommend a lot of times is we'll have clients that maybe they don't have the money sitting in the bank to pay the mortgage off, but maybe the money that they could pay off the mortgage is in their 401k or their IRA.
I get that one a lot.
So a lot of times people will ask, well, should I, before I retire or after I retire, should I take, we're going to owe another $120,000 still on the mortgage. Should I take that out and just pay the mortgage off all at once? A lot of times we recommend against that. Because that has the potential, depending on other income, to throw them in a much higher tax bracket. Right? So in order to have the $120,000 to pay off the mortgage, they may have to withdraw $180,000 or $160,000 in order to net after tax enough to pay the mortgage off. And that's usually not the best way of doing it. What we'll recommend, as long as individuals are okay with it, is maybe rather than taking all the money out all at once, maybe take a little extra out over a 3 or a 4 or a 5 year period.
Chip it away.
Chip it away. So maybe don't pay it off this year, but maybe over the next 5 years you'll get it paid off. That's usually a little better way of going about it. Now, if individuals are still struggling with the idea of just owing somebody some money, one of the things that I'll point out to them is there's been a lot that's been said over the years. Some people have built entire careers on recommending that individuals should get out of debt as quickly as possible. And there's some good things to that, but I will say that there is a big difference between being in debt and utilizing leverage.
Leveraging,
if you will. Almost every Fortune 500 company uses leverage to their advantage. The way I define debt is, let's say that you have a car loan as an example. If you stop making your car payments, well, somebody's going to come take the car, right? You're in debt. But let's say that you have the money in the bank to pay off the car loan. If you lose your job or something happens you didn't anticipate, you can no longer make the car payments, but you could still write a check to pay the car off. Well, you're not in debt, right? You're using leverage.
The bank's money,
You're using the bank's money to your advantage. So the same thing is true with your mortgage. If something happened and everything hits the fan, if you really wanted to, you could go take the money out of the IRA or the 401k or the bank or whatever the situation is and pay off the mortgage. So you're not really, in that scenario, in debt. You're using leverage to your advantage. And those are two really different definitions or two different ways of viewing things. But some people struggle with that, where they just want to get everything paid off as quickly as possible.
So what you're saying is really there is no right or wrong answer to paying off the house.
I don't think so. I think it comes down to personal preference.
Yeah.
Because, like I said, I've been helping individuals for well over 20 years now, and we've helped thousands of couples, make these types of decisions. And factually, you can prove the numbers,
Yeah.
right? But life isn't always just numbers, right? Life is living and feeling good about your decisions and being able to, be comfortable with those decisions. And so from a financial standpoint or a factual standpoint, we can prove all day long probably that we can get a better return than whatever the mortgage is costing them. But some people just have that strong desire, which I get, to not owe anybody any money at all for anything.
Well, what about the other side of that? I know there's advisors out there sometimes that will tell people to go get a home equity line of credit and let's go invest this. Would you say that's the right or wrong thing to do? Or?
I think that those are very rare situations where something like that could make a lot of sense. If you don't have the money to invest without doing that, it may not be the best thing to do. You probably can't technically afford it.
Yeah.
I know some people that have done that, and it's paid off and it's worked well for them, but they understand this idea of leverage versus debt. And if the investment that the investment that they made, if it had not worked out, they would have been able to pay the mortgage off.
Right.
A lot of our viewers aren't going to be in that situation.
Yeah.
Whereas if they did that and they made an investment and it didn't work out, they would have some issues and some problems. So it's going to be very, very rare that those things would make a lot of sense. I feel differently, though, if you want to talk a little bit about reverse mortgages.
That was my next question.
Because I think a reverse mortgage can be something that could be beneficial. But again, I think that should maybe be kind of like a last, the last option. That's when after you do something like that after you've explored all the other options and there's just nothing left. Then doing a reverse mortgage can work out. In order to get the maximum benefit from the reverse mortgage, though, you need to have the house paid off.
Right.
So there's really no right way or wrong way of going about it. I think it comes down to personal preference in most scenarios. And I understand there's a strong desire by almost everybody to, at some point, have their home completely paid off and own it free and clear.
Great. Well, as you can see, there is no right or wrong way to answer that question when it comes to the mortgage. But if you have a question about your financial situation or whether or not it makes sense for you to pay off the mortgage, give us a call at our office and schedule a time to come by and meet with one of our advisors.